Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 18th day of December, 2014, and this is the daily report for gold and silver. Following lower pricing yesterday, we have higher pricing across the board in the precious metals today. Gold currently trading just under $1,200 an ounce. Call it $11.98, $11.99 in that area. The low $11.91.70 and the high $12.14.40. Silver also showing some nice gains, actually up over 1% on the day, 19 cents higher, below $16 though, $15.91. That is our current print, high $16.33, low $15.77. More on silver in a little bit. First to gold. Interesting week, no doubt, in the precious metals markets. Looking at a weekly chart, when we do that with all of this oscillation, higher pricing, lower pricing, you can see this, of course, is Thursday, so we still have, of course, one more day to go. But you can see that we're dramatically showing a down week in gold. And to be honest, that doesn't surprise me given the kind of optimism which we have seen following the Fed meeting and the rally that we've really seen in the Standard & Poor's 500 and Dow Jones Industrial up over 300 points today. Take a look at this. This, of course, is a half-a-day chart, Standard & Poor's 500. This is the E-mini. You can see that this market has moved dramatically up, currently trading at about 2055. Of course, that is shy of the record high at around 2080, but a dramatic move nonetheless. You can see it on the half day as well as the daily. And this, of course, is just that. We're looking at the Standard & Poor's E-mini again, this being a daily chart. No doubt these last 2 days have seen a dramatic rise up substantially as we see the Dow moving back towards record territory and the S&P moving back towards record territory as we go into the conclusion of this year. Not to be outdone by that, we've got some tremendous strength in the dollar. Now, we're looking at our dollar index. This, of course, is a weekly chart, but you can see that we're almost up near these tops. This, of course, being, I believe, a 4-year high. When we break this down to a daily chart to just see the last activity, you can see that over these last 2 days, today not nearly as dramatic as yesterday when we saw this market plunge from under 88 at around 88.10 to move back over 89 in terms of the actual range itself. It's been a dynamic range, but we still have got this territory that we're just at. I believe the top was right at around 89.50. So in light of those moves, it doesn't surprise me that we're seeing gold under pressure, but it's been resilient to say the least, given these other outside influences that we're looking at. Of course, on the bearish side is oil, which is back down today. So traders, we have talked over this last week about the two distinctly different models that I am looking at in terms of how I think this most recent activity in the precious metals market, specifically gold, might in fact unfold. One of the models that I'm looking at is really based on some of our more short-term studies, which incorporate this most recent rally. At this point, I believe the recent rally that we have seen is easily a counter trend. We define that because, one, the market did not have the ability to make a new high, and the new high would have had to been above this particular price point, call it 1254, 1255, and in fact came close to, but the high that we got was around 41. So when we draw a shorter resistance line in the market by looking at some of these tops, and this of course is a very crude point to put it at, we could fine-tune this a little bit more, but in essence we saw that as this market came up and rallied, it absolutely hit some resistance. You can see that right here, and has been trending lower from that point. In fact, it is below the 50% point in terms of a retracement, because we have this very, very small retracement, 1255 on the high, 1230 on the low, this being 50% right in here. We're right at about that point, and you can see that it does appear as though it's trying or attempting to find some support around 1200. So one of my models that we're looking at basically says that what we're experiencing was some sort of a rally, and that what we're having is a wave 2, and that wave 2 right in here is going to be, rather than a corrective ABC, could easily be composed of a series of 5 legs. 1, 2, 3, 4, 5, and then our thrust. I think if this particular pattern is the pattern that we see unfolding, and we do get some sort of a compression, typically when you have some sort of a compression triangle, it will break to the most recent predominant trend that's intact. Of course, we did have this rally, came up, had a lower high, but if we see this compress, we could see a breakout form and move to the upside. Now, that would be the way that I would look at this to kind of unfold as one of our models. This would be our bullish model, of course. Now, on the bear side of the market, we're looking at something different. And the chart that we have been using really to illustrate this potential and this particular model is this 3-day standard candlestick format chart. This, of course, being the spot market or Forex gold right here. And what we're looking at on this particular model is we're really looking at a more long-term structure, because we're looking at the decline that really began on this point here back at, call it, the end of 2012. Of course, 2013, we saw this market fall and hit this triple bottom here. It would break and break below on this most recent move, which took us to 1131. But the key on this particular model is, rather than focusing on this most recent rally, what we're focusing on and giving more credence to, so to speak, is the fact that we had the inability to take this particular high out. And based upon this model, I think we could go and see gold test, not so much this year, but maybe the beginning of next year. If we get this market continue, I think that the key point we want to look at, as we talked about yesterday, is that 61% retracement, 61% retracement from just under 700 to above 1900. And if it breaks through that particular point, my sense is that it will go to lows. On the lowest aspect would be about 1032, but I'm looking at about 1080 as where we would find support if, in fact, we saw this market drift lower. But the fact that we were unable to take this particular high out, to me, bodes really, really strongly in terms of probability on a technical basis that we could see lower pricing in gold through the rest of this year into the beginning of next year. Now, one of the key elements that we're looking at, as we talked about, is the dollar in the equities markets. And although the dollar was stronger today, but not that strong, the equities markets was absolutely on fire. If we see a continuation of that, a continuation in oil prices being down where they are, not necessarily going lower, but being in this area, we're putting a lot of outside influences to the bearish side on gold, and I would expect to see gold drift lower. And traders, lastly, I do want to take a look at this monthly chart just for some real perspective in the marketplace. We did and are currently having an up month. We'll have to see how that finishes because we're only halfway through that. But we have also made new lows that didn't exist on the prior month. So when we look at that, we also see one other point that would really, really need to hold for any kind of bullish momentum, and that's 1092, 1080 to 1092. It is a 50% retracement from the longest of retracements, because this is just under 300 to the record top, and so we could maintain some sort of a semi-bullish stance even on a move down to this point, if in fact it then bounced off, if we consider these major waves. So what am I really looking at? I do believe that the probability for lower pricing in gold exceeds the probability for higher pricing in gold in the weeks, call it month ahead. And lastly, let's take a look at silver. Silver's been under dramatic pressure. Of course, we did see some sort of a bottom, at least on a tentative basis, for them a couple of weeks back when we hit this low at 14. That came in right after Thanksgiving on the Monday following the 4-day weekend. We haven't seen those prices since. But however, look at this week. We've seen, even with today's dramatic rise, that's what's taken us off of these lows here. We do have a tremendously down week in silver. And honestly, I would expect pressure to remain in silver, of course, if we see pressure remain in gold and see the stock market move back to the record highs. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and Gold Outlook 2015. We will have part 1. That will come out through Kitco. Part 2 will be on our site. We'll talk to you tomorrow for that. Bye-bye.